Have you ever known anybody who inherited debt? Or do you ever know anybody who's actually lost a lawsuit and they've owed money because of that? These are examples of non-operating liabilities. Just like assets, you can classify liabilities as operating versus non-operating. And the same rules that apply to assets once again apply here to liabilities. You see, operating liabilities are as money and services that you owe that have a direct impact into your operations of the business. For example, paying suppliers. If you have a bill that you have to pay, whether it's a utilities bill or some other kind of supplier bill, those are going to be accounts payable. And those accounts payables are operating liabilities. At the same time, unearned revenue. You know you have to give them work in the future. That's an operating liability too. Also, an account called accrued salaries, which is really just a fancy way of saying money that you owe your employees. Those are also operating liabilities. However, non-operating liabilities are a little bit more tough to really kind of describe and feel. You see, losing a lawsuit is something that's not really part of your operations, unless you're a law firm, so it doesn't really have to impact your operations, but you still owe people money because you lost a lawsuit. That's a non-operating liability. At the same time, if you buy a company and they have some debts, sometimes that can be classified as non-operating liabilities as well. Pretty much anything that has to do with the operations of a business is considered operating assets. And a quick tip is actually it's a lot easier to identify what's necessary to operate the business than it is to figure out what's not necessary to operate a business. So, for most analysts and people managing businesses, it's a lot easier to look at liabilities saying, hey, what's actually critical to operations, and then just classifying everything else as non-operating liabilities. And that's what you'll see a lot of the time. However, that's not always the case, so you have to be aware. Losing lawsuits is definitely one of those that some people have to have some red flags raised about. And acquiring a company that has loans is also a great opportunity for non-operating liabilities to hit your balance sheet. Keeping those two ideas in mind, the rest is probably easier if you just look at what's operating and everything else isn't operating. So let's recap really fast. Operating liabilities are stuff like money to employees or money to suppliers or work that you owe to your customers that are necessary and important to your operations. Everything else, non-operating. How's that sound?